for your local frequency on the way to the bank. He says what you do. Banks are tightening up their purse strings and everything else, actually. It's becoming increasingly difficult to get a loan. So what can you do to make yourself look more attractive to the banks? Not a haircut or not that sort of thing. We're talking about the substance behind you, the documents and your portfolio and your salary and all your things that make you look good or a risk. Property Apprentice co-founder Debbie Roberts joins us now to share her tips. It's got tough, hasn't it?
It has got tough.
Yeah.
So, and it happens every downturn. You know, the banks always tighten up their lending criteria. So there are a few things that you can do to improve your chances of getting a yes.
Now is this because they've been asked to? They think they're going to have to hold more capital from about November, I think, which means they have to have a lot more money in their reserves.
That's one of the reasons. So, but it is a normal stage of the property cycle as well. Whenever the market starts slowing down, banks tighten up their purse strings.
So I'm doing this
risk averse.
So I'm doing this right now, refinancing a few things, and oh man, it's like a Spanish Inquisition. Whatever that was.
Exactly. That's part of the responsible lending code as well. You know, so they have to make sure that they're not doing any irresponsible lending, or they'll get themselves into the shtuck.
Yes, and so more documents. They want so much.
Yes, they
so many
do.
Documents.
Yes, they do. So I think one of the first things that someone should do if you're looking at buying a property or getting a mortgage, then one of the first things you should do is find out how much you can borrow. You know, rather than going shopping first and then get disappointed.
Yes,
so
which is likely actually.
Exactly, it can happen, and all of the banks are different when it comes to their lending criteria based on your provable income. So
are some looser than others? Are some more generous?
Some are. So they just have different rules around how they crunch the numbers on what your provable income will support. So that's the reason that we recommend that you work with an independent mortgage broker.
Yes.
Because if you're going directly to the bank yourself and you pick the wrong one, you'll get a no. And then if you go to another one and get a no there, it just makes it harder and harder.
If you're a good client or potentially a good client, you walking off the street or a broker takes you to that bank, cashback. Are you getting cashback? Is that still a thing?
Yes, yep. So, I think so. I'm not a mortgage broker, but yeah, I think they're still doing.
Yeah, they're still putting a couple of $1,000 back.
Incentives. The banks are actually quite competitive at the moment. You know, they're competing with each other for market share. So, you know, and a lot of the banks have got capacity to lend above the 80% for home buyers.
Yeah,
so
but they're very selective now.
They are certainly selective, yep. So one of the things that you should do, first of all, find out how much you can borrow. Secondly, double check that you can afford it.
That's even kind of important.
It really is. And if the bank tells you can borrow a certain amount of money, just make sure that that fits in with your budget. One of the things that you can do to improve your chances of getting a yes is to repay or reduce any consumer debt that you've got.
So high purchase.
Yeah, exactly. So banks don't want to see someone that looks like they've got what they call an appetite for debt, you know?
I thought the banks quite like that though too.
No, they don't.
No?
They don't. Like I said, banks are really risk averse. So something else that can help as well is to reduce the limit on your credit cards or even get rid of your credit cards.
Is there a sweet spot when it comes to credit card debt levels? You know, a number when they look at something that might be 30 or 40,000, they think, well, that's far too big. Or 8,000, 5,000. Is there a number?
So it depends on what your provable income is.
Right.
But if you've got a credit card, let's say you've got a credit card with a $20,000 limit, just for example, even if you don't use that credit card or if you repay it every single month, that is going to affect how much you can borrow from the bank.
Because it will look too big.
They assume that you've taken out the whole 20,000 even if you haven't used it. So it will affect your lending ability. So
it'd be a good weekend though if we took out 20.
Wouldn't it? But then you've got to pay it back, so it'd be like a hangover that never goes away, especially with interest rates on credit cards.
Well, and they should come. Well, that's another topic, but they should come down.
Yeah, well, that would be nice. Yeah. So something else that's really important is to keep your nose clean for at least 3 months, because the banks want to see your bank statements for all of your bank accounts for the last 3 months.
What do you mean by keep your nose clean?
So just make sure that you're paying bills on time. You know, make sure you're not going into overdraft if you haven't got an overdraft facility, or just the basic stuff. And something else which is really helpful is if you're currently renting and you're looking to buy a home, it's a really good habit to get into to work out how much a mortgage payment would cost you on the amount of debt that you're looking at borrowing, and then however much you pay in rent, save the extra.
Oh, I see. Yeah,
Because that way it's proving to the bank that you're a safe bet, you can afford to pay the mortgage.
God, this is like sort of School C and UE all in one, isn't it? I mean, a ten's are $100 at the warehouse.
I don't know, is there at all one of the banks that's considered maybe, for lack of a better description, a softer touch or more willing to give loans?
So the banks change every other week, So, I mean, I can't keep on top of it. That's why we work with brokers, mortgage advisors, because that's their full-time job. They keep in touch with the banks on a daily basis. So, rather than having to try and figure out which is the best bank to go to on any given day, just deal with a professional.
Yeah.
Should you actually work out your cost of repaying the loan? Should there be an increase in interest rates so you don't get caught out?
Yeah. So we always recommend that you crunch the numbers on how much that mortgage would cost you if interest rates were around the 7 or 7.5%.
Oh, you go that high,
which is
yeah.
a lot higher than you can currently get. But this is the thing, interest rates are at historically low levels at the moment, and the long-term average interest rate in this country is around that 7% mark.
It certainly is, yeah. It's free money right now. It's close to free money, so get
if you've got a mortgage, take advantage of those low interest rates and pay that debt down.
Hey, lovely to see you. All the very best. You always make it really simple and clear.